Good afternoon, everyone, and welcome to the webcast. My name is Jonathan Howard. I'll be your host today. Our topic today is swing trading. What is swing trading? What are some of the common buying strategies? What are some common selling strategies? What is this new product, Swing Trader, all about? And what makes Swing Trader different? But before we get started, I'd like to introduce our sponsor. His name is Mr. Don Kaufman, and he's the CEO of TheoTrade.com. And he's going to talk to us about how to swing trade options on growth stocks. Welcome, Don.
Oh, thanks for having me. And I just want to start by thanking Investors Business Daily, of course, IBD, for allowing us the opportunity to come on, of course, to this webcast. So I'll tell you just briefly about myself. Some of you may or may not be familiar. I've been around the industry for an 18-year trading career. Just so we're clear, in the picture there that you see on your screen currently, I am the individual on the right. It's actually a shot out of CNBC, pretty avid short seller, that is me, of Apple. So that's my most recent appearance on CNBC, and they pitted me against none other than Mr. Wonderful himself, Kevin O'Leary. So I've had an 18-year trading career. I'm the co-founder of TheoTrade. I spent the previous 15 years at thinkorswim, of course, building the education division of thinkorswim, working on the trading application. The most recent 6 years of my career, prior, of course, to founding TheoTrade, the most recent 6 years of my career as the director of TD Ameritrade's education group for their 7 million clients out there. So what I want to discuss a little bit today is using options to swing trade some of the growth stocks. So if Jonathan, you could just advance, excellent. So using options to swing trade growth stocks out there is really the swing trading side of it is going to be, again, I'm going to leave that to Investors Business Daily, who is phenomenal at stock selection. What we do is ultimately how you can trade options on IBD's favorite stocks without ever, of course, holding the stock, which is, a really difficult aspect is it's tying up a huge amount of capital for many of you. So what are the best option strategies, number one, to swing trade stocks? Okay. Next, how do you increase your probability of success when using options to swing trade? Probability in options is ultimately everything. And what option strategy and really the analysis techniques do you use? That is not only strategy selection, but finding the right options to use when entering and exiting any given strategy. And ultimately, along the lines of probability, how you can be wrong and still make money on IBD stocks when trading options. Now, these many other questions, okay, are all going to be answered. Most of all, how you can structure your portfolio so that really you can set up for one move has the potential to make a tremendous amount of your year in terms of trading. So again, we're coming on here, albeit briefly, at the beginning of a swing trading, IBD session over here. The answers to all those questions, find them right here. It's TheoTrade.com/free. And what we've actually set up has no pitch, no catch, no credit card. There's no cost associated. We wanted to really tack on to the idea of swing trading here and how you can use options to do those swing trades. So go to the web address listed above. You're just going to get a full access pass to what we call Total Theo for the next 30 days. And if you are brand new to options, okay, got to consider that many of you have no idea what an option even is. I said the O word. We will walk you through everything you need to know in a 5-part series. We call it Options 101. It's all part of it. Again, that class alone, all right, 5-part series I think you'll really enjoy. Again, go to TheoTrade.com/free and check us out for 30 days, and all the material is archived on there. Once again, I want to thank Investors Business Daily for allowing us, of course, to come on, sponsor this swing trading webcast. Thanks, guys.
Well, thank you, Don. As we dive into our content, I'd like to introduce our two speakers. Our first speaker is Mr. Chris Gessel. He's the Chief Content Officer for IBD, and then Mr. Justin Nielsen, who's our Market Research Director. They have been instrumental in creating and maintaining the products. We're going to pick their brain today and try and see what's behind the scenes. So Justin, let's start with, what is swing trading?
Well, the whole idea behind swing trading is that there's really, when a stock is going up, it doesn't go straight up the whole time. There's these limited bursts, limited times of activity. And what we're going to be doing with a swing trading strategy is we're going to take advantage of these short bursts and kind of sidestep some of the consolidations and pullbacks. So in essence, it's this shorter time frame that we're going to be focused on, and this nimbleness that's going to help us make more money out of our trades. As you can see here in the chart, now this is an ideal situation, where you're kind of buying at the bottom and selling at the top. But if you can just kind of get close, buying close to the bottom, selling close to these tops, you can actually do very, very well. And what works for the individual investor is that we're smaller, we are more nimble, and we can do this when institutional investors can't.
And with the same way that the individual chart, you can dart in and out, the market, you need to stay on the right side of the market with these swing trades as well. And we've got here an 18-month chart of the NASDAQ, and we pointed out a number of rallies where the NASDAQ was trending above its 10-day moving average. And some of these lasted a couple of weeks, some 4 weeks, some 2 months. But those are the times when you can be most aggressive and really make a lot of money swing trading. You can still do well in some of the choppier areas, but it's going to be tougher. And like we see right now in the market where it's going down, the long trades don't work all that well. Most of the money is being made on the short side.
So a few keys to swing trading. Of course, as Chris just said, you have to trade with the bias of the market. The market is still vital. We can still make money, as you said, on the short side when we're in a downtrend, and we do put those short trades on. We're going to be trading both sides here. Swing trading requires a lot of vigilance and quick action. It's fast-moving, shorter time frame, so you have to be really on top of this. And so that's the reason why we have these alerts that we're going to talk about a little bit later. The short time frame that we're talking about, we're not talking about consolidations of 7 to 8 weeks. We're really talking about shorter consolidations and, as a result, shorter time frames in which we're going to be holding on to these stocks. Most trades run about 5 to 10 days. As with any strategy, you have to know when you're going to exit. So that's absolutely critical with any strategy, but even more so with swing trading. We're going to be cutting our losses even quicker because we're going to be taking our profits quicker. Now, we need to maintain a positive batting average as much as possible. The truth is, even if our batting average goes negative, we can still do well with this strategy. But the more we can get a positive batting average, the more that's going to help us. And these big, these little gains can really turn into big profits. So just a real quick portfolio management concept. We talk a lot in CanSlim about the 3-to-1 profit ratio. We're going to use a 3-to-1 profit ratio here as well. It's just rather than a 20 to 25% gain, we're going to focus on a 10% gain, 10% profits. And in some markets, like what we have right now, we might be cutting that even closer, taking profits earlier. Now, because we are going to be taking our profits earlier, we have to cut our losses quicker. So we're pretty much not letting anything get beyond 3%, and a lot of times it's going to be significantly less than that.
So, Chris, why don't you talk to us about the two major buying strategies when trading swing trading stocks?
All right. Well, we're taking a lot of concepts that are familiar in CanSlim and applying them to a shorter time frame. So the main buying strategy we're looking at are breakouts, and we're looking for consolidations among leaders. Because these are the stocks that are going to have the big moves, and we're running in and out and grabbing pieces of those moves without having to sit through the big correction, sometimes 20, 25%. Now, and like all bases, tight trading is a plus. Sometimes the consolidations may be a few days, maybe 5 to 10 days at the longest. And then we will also be looking at conventional CanSlim bases like flat bases and cups with handles. But once it starts running, we're looking for much shorter consolidations. And then we buy, just like in CanSlim, when the stock hits a new high, and a a difference from typical CanSlim loss cutting is we're not saying we're going to let it go down 7 or 8%, that's much too large, or really use that fixed percentage of 3%, that's more like a guideline. We really set the stop at the low of your breakout day because these stocks should be working, and if they undercut the low of the breakout day, there's something wrong and we want to get out and move on. Now the other main type of strategy are reversals. Again, very common in CanSlim. We often talk about buying off the 50-day moving average, and we'll be doing that as well. But we'll also be looking at shorter moving averages and shorter pullbacks. Typically, you want to see the stock come down in a contained manner and then reverse higher. Wait until usually towards the end of the trading day so you have confidence that it's going to be closing up for the day and near the high. That's when you would make your purchase. Now, sometimes we have what we call red reversal days where there's a nice reversal, but it doesn't quite get back to the prior day's closing price, and so the bar is still red. In that case, we'll probably put it on Swing Trader, but we'll wait until the next day when it crosses above that reversal day high before you open your trade. And just like with breakouts, we're going to put the stop below the low of the reversal day, and a lot of times, again, this is going to be 3% or less. Sometimes it might be more, and if it is, you just reduce your position size, and we can talk about that more later. Now, every time you enter a trade, you need to have an exit strategy, and with CanSlim, we've got lots of sell rules, whether it's just taking 20 to 25% profits or breaks below the 50-day in volume, climax runs, same sort of thing here in swing trading. The main thing we'd like to do is sell on strength. And as we said, generally when we enter a trade, we'd like to get a 10% gain. We don't get them all the time, but that's our goal. And actually in stronger markets, they happen more often than you might think. Now, as we also talked about a few minutes ago, in a market like the one we're having now, maybe 10% is not that realistic all the time. 5% is a better goal, and so you can start taking profits at that level. The thing is, you don't necessarily have to make an all-or-nothing decision. People who've been on Swing Trader since it's opened on last Tuesday have seen how we've taken partial profits. We did that with FCX. It was up 5%. We took some money off the table, and then it ran up well beyond 10% and came back, and we exited the trade at that point. The other type of sell signal we're looking for is climactic action. A lot of times a stock will break out and it'll start moving up nice for, let's say, 4 or 5 days, and then maybe over 2 days or a single day, it'll have a big move that's much wider than the other days. Now, by this time, it's probably getting a little tired, a little extended, and we're going to often sell into that, or at least take some partial profits. Because the nice thing about swing trading is it's not all about 5, 10, sometimes 15% gains. Sometimes in a good market, you can really get stocks that will just run, and you'll be up 20, 30, sometimes even more than that percent in a very short amount of time. Lastly, we're looking for momentum or character change, like a downside reversal off of a new high, or the stock is moving up nicely, and then all of a sudden the volume goes higher, but it really doesn't make any progress. It's stalling, churning, same concepts that we're talking about, in CanSlim with that sort of trading. But with swing trading, that also is a signal to take your profits and keep moving.
And sometimes I find that reacting to some of these signals is actually a little bit easier with the swing trading system because, I sometimes find myself, with a long-term strategy kind of hoping for that extra, gain and waiting a little bit longer, giving it room. I'm much more comfortable with a short-term strategy, just taking the profit and moving on to the next trade.
Yeah, you don't feel like you have that time investment, and you know that if the stock keeps running up, it doesn't really matter. It's going to consolidate again. You can get back into it, or there's going to be something the next day or the day after to jump into. So it's a much more, in some ways, liberating strategy, especially in a market like this. Now, while we do sell on strength, of course, we have to sell on weakness. We need to cut losses. We need to take profits when the trend moves against us. So the one sell rule that we really, really stick to is if the stock undercuts the breakout or reversal day low. And I saw a question up there, well, why? Today we had CBS up there. It was breaking out on earnings and really bucking the market nicely. In fact, for a while when it looked like the market was going to turn positive, this thing was really starting to take off. So we put the stock on Swing Trader, but then the market turned lower. And CBS reversed all the way and took out the day's low. Now, as it turned out, it bounced and didn't finish too bad. But there are plenty of other examples of when that stock undercuts that breakout low, it's done. And we'll show you a few. So again, we're not in CanSlim, you're never married to a stock. In swing trading, you're barely dating it. The other signs of weakness are when the stocks will close below some short-term moving averages. Now, in choppy markets, again, like we've seen over the last year or so, we've really been using the 5-day moving average. One reason is, especially last year, when a stock would close below its 5-day moving average, it almost guaranteed that it would close below the 10-day moving average and maybe fall even more. But when you're in stronger markets, and I'm sure a lot of you who've been to our seminars have seen how some of these stocks will break out and they will run for weeks sometimes above their 10-day moving average. And that's how you can get those really big gains, 20, 30, sometimes more percentages than simply a 5 or 10% gain.
But because we're using these shorter-term moving averages, we're not going to take the bigger drawdown. Whereas with a lot of times, for a leader in CanSlim, you have to be ready for a 17% correction. We're never going to see that. We're going to be taking our profits much sooner. Yes, we might miss out on some future gains, but we're going to be booking profits, and that's going to really help.
This is all about maintaining a positive batting average and making sure your winners are larger than your losers. They don't have to be a whole lot larger to really work out, but it is a game of good portfolio management and working the averages in your favor.
So those are the strategies, but probably the hardest part of swing trading is finding stocks to swing trade. You find charts like this. There's a lot of competitors out there who have charts with all these different lines that converge or diverge, and you're looking for lines to cross. There is bullish divergence. There's AD lines. They're very, very complicated charts. Where do we start?
Well, the fact is, especially with a short-term time frame, technical analysis is critical. There's just no question. But the biggest problem with, some systems is that you've got all these different technical indicators that you're looking at, and they can give conflicting signals. So you might have 5 bearish signals and 6 bullish signals, and you just don't know what to do. So what we're going to do with Swing Trader is we're going to keep everything very nice, simple, and clean. Let's go ahead and blow this chart up, and you can see real quickly. We're going to put on there the buy, the stop, and the profit goal. That's it, nothing else. So you can really just get a quick sense of what action you need to take at each step of the way on the chart. And we'll be going in some depth a little bit later on the trade setup and what you can learn from that as well.
Let's do that right now. Let's talk about our new product, Swing Trader, and how it can help the customer.
Well, okay, so as you said, this is our newest product, and really it's designed for both new and experienced investors because we're going to be walking you through these trades, and the idea is making money on these short-term trends. Now, I have seen a couple questions already that have come in, people asking, are you talking about taking a position in the stock or the option? We're talking about stocks here. We're talking about putting on stock trades, equity trades. We might go into some ETFs. There have been a few cases where there were industry moves that we might consider an ETF. But right now what we're really talking about are specific stock positions. Now, our early adopters have already seen some success with this, and we'll go over some of those past trades. But in essence, what you'll be given is one simple list with the section detailing the buy point, the stop loss, and the profit goal. Again, that's kind of those 3 things that we're going to go over for each trade. And now, since these are also faster moving trades, we understand a lot of people work, for a living, and they just don't have time to sit at their computers all day looking at charts. So what we're going to do is we're going to send you alerts, either via email or push notification. So you're going to be able to keep track of what's going on in the market because we're going to be doing that for you. And we'll talk a little bit more about the different types of alerts that we're going to be sending you. But again, the basic idea here is we're going to keep it very simple, very clean for you. So let's just quickly look at the platform that you're going to be using. So you have at the top right-hand corner, there's 3 tabs: current trades, past trades, about. That's it. You're going to spend most of your time on the current trades. And that's what you're seeing right here. There's 3 window panes. We'll go through each one of these one at a time, but you have trade setup, the market action, and the current trades list. And those are the things that we're going to be spending our time on. So let's start with the trade setup. So for each stock, you're going to see the name of the stock, its current price, and under trade setup, we're going to tell you, was this a breakout? Was it a reversal? What was the date that we put it on? Sometimes we're going to put something on, ahead of time before a breakout. So we'll tell you, oh, this is the date we put it on, and this is the day that it actually triggered the buy point. We're going to put the buy zone start price. So when it crosses the high of a reversal day, we're going to put that price right in there for you. Generally, we're looking at a 2% window that you want to be buying in. So this is not a 5% window, it's a 2% window because you have to be a little bit more accurate. Closer to the buy point is better because you just don't have a lot of wiggle room here. Now you'll see underneath that, if the stock is currently trading in that buy zone, we're going to put a flag. It's going to say stock in buy zone, and you can see the arrow pointing to that right now. Below that, we are going to have the stop loss. So in this case, this was a reversal. So of course, we're going to use the stop loss as an undercut of the reversal low. 44.34 was the price at this time. Now the first decisive close below the 5-day moving average is another option that we can use to prevent a loss from getting large. So we will be using that once the stock gets above that 5-day moving average. And then, of course, the goal is usually going to be a 10% profit target, and we'll give you the price target right there. Or, again, if this is a stock that's been running up, we might use the first decisive close below the 5-day moving average as well. I should also point out that if you're looking at current trades right now, you're going to see in the goal a lot more 5 to 10% because of the market conditions. We're kind of taking our profits a little bit quicker on these. So we're giving a range in which our profit target is hitting. Now, if you see over to the right, you're going to see a chart on each one. If you click on the detailed chart link, or if you just click anywhere on the chart, it will pull up that individual trade, and that's where you'll see the annotations. And as we said before, it's going to be very quick. Buy zone, start, stop, and profit. We also are going to put the earnings due date on there for you. It's absolutely critical that you know when your earnings reports are on your stocks. And this is something that we're going to be tracking for you. We're going to actually put on there, in a lot of cases, we'll confirm with the investor relations of that particular company, and we'll let you know, is it going to be before the open or is it going to be after the close? But especially, right now our biggest problem is it's earnings season. So there's a lot of stocks that we're looking at, and we aren't putting them on because they've got earnings in 2 days, and We're just not comfortable doing that. So here's the blow up of that. Again, 3 points. The arrows are just showing buy point, stop, and profit goal, and that's it.
Now, the other important thing to keep track of all the time is the market action and what the short-term trend of the market is. We have 3 states. It's either in an uptrend, sideways, or downtrend. Today we had noted that we were sideways. We were trying to reverse out of the sell-off that we've been having, but today we undercut the low of the NASDAQ from 2 days ago, right?
Yeah.
And
or it was undercutting Friday's low. Actually, I just noticed Jonathan actually updated this. So this is actually the current market action that we just posted a few hours ago.
And so again, we're typically looking at the NASDAQ and really paying attention to how it's acting around its 10-day moving average. And right now, it's trending below it. It's taken out a low, and so it's in a downtrend, and that's why most of our activity is looking for shorts, and why the longs are going to be very difficult to find and probably even more difficult to make work. So right now it's more of a shorting market, and we'll look for a reversal and then start actively trying to find long trades to put on there. But again, any time the market is pointing sideways or down, it's time to be more cautious, make fewer trades, make smaller trades, and really save your powder for those uptrending markets where the market is trending above its 10-day moving average.
How does this differ from the big picture?
That's an excellent point. So again, sometimes it might correspond, but think of it this way. We could be in a major bear market and we could be showing an uptrend because there would be a tradable rally. So we're very much focused on the short-term trend of the market, what we can do at that time, less concerned on the overall market, although I will say that shorts, until you're in a clear overall downtrend, are going to be tougher even in corrections. So again, when you're generally in a sideways or down market, cautious, smaller trades, fewer trades.
Okay, now the last window pane that we'll go ahead and cover is the current trades list. And so you'll see everything that is on the list right now. And if you click on any one of those, it will pull up in that first pane that we went over, the trade setup. And what you can do is you can click on next, or you can down arrow, or you can spacebar, and that'll cycle you through all of the names so you can get that detailed look at each of the stocks. Now, on the list itself, you'll see that we have a blue new for anything that is added in the last 24 hours. So at the time that we took this screenshot, CBS was on our list. We added it this morning, but we have since taken it off. But it was a new trade, so we have that new button on there. We also have a short button. So you see to the right of two of our stocks, and these are the ones that are actually up the most right now. They're up, I think, both 3% roughly profit. These are the short plays. Now, for those of you that don't know what a short is, it's basically, the idea is instead of buying low and selling high, you're selling first. You're borrowing the shares, you're selling the stock first, and then you're hoping to buy it at a lower price. So that's the way a short works. And you do need a margin account for that, and that's something you can talk about with your broker. You'll also notice that the last stock that we have on there, as you go through all of the columns, we are showing you the price change, price percent change, volume percent change. We have in buy zone. If you have something that is currently actionable because it's between the buy zone start and that 2% window, we'll have a trick, it'll say yes, in buy zone, and then on the current gain loss percentage, that last column, will show you what the current gain is from the time that it entered our list. So again, not the ideal price that we should have gotten in, but the price that it actually we got when we put it on the list. And if it's not something that has gone through into the buy zone yet, you'll see not triggered, and that's what you're seeing at the bottom there with RPM. Now, if you click onto the Past Trades tab, you'll see, right now, most of these trades were done during our beta. We were doing these live. This is not something that we went in and, decided, oh, you know what we should have done. This was done live. So you can see the winners, the losers. You can sort by any of these columns. So you can sort, it gives you the entry price, the exit price, the entry date, the exit date, and the percent gain or loss for that particular trade. You'll also see in here stocks that weren't triggered. I think we have like 3 in there right now that never triggered. So we took them off, put them to past trades, never triggered, so it never should have been a trade that you entered. If you click on, before I get to that, one thing is that you can search any of the trades. So this is especially as the number of trades have gotten larger here. I've been using this myself. So, FCX is something that we've put on a couple times. Mm-hmm. So if you want to search, let me see FCX, you can type that in and all the trades we had on FCX will come up. So if there's something that you wanted to look at, you could see the details on there. Now, if you click on any of the ticker symbols, you're going to see a snapshot of that particular trade. It's going to show you exactly how we wrote it up at the time. You'll see that in the trade setup, You'll see what the buy zone that we put was, the stop loss. Now, sometimes we are going to change the stop loss. We're going to start at a certain level, and we're going to raise that stop loss to protect our profits. So you will see the stock as it was when it came off, basically. So it's the most recent activity on the stock. You'll see the goal and what the chart was marked up like at that time. And basically it's a snapshot of when it comes off, so it'll kind of cut off the rest of the day's activity. It'll just show you this is what it looked like at the time it came off. So in this case, we're looking at AU, which was one of our gold stocks, and we got a 1% gain off of this one.
Well, let's talk about that one. So we added AU, Anglo Gold, on April 28th, and there was a lot of activity among gold miners that day, and so we started looking around and we found this one, and it was breaking out on earnings. Had made a 5-day high when we put it on.
Oh, no, this one wasn't on earnings. There were a number of gold stocks that did have earnings, but this one didn't have earnings yet. There were a few others that did have earnings, but this one hadn't come out with its earnings report.
You're right. I was thinking of FCX.
Yeah.
Our other big.
Yeah. So this was kind of the industry. This was the industry move.
Right.
That was happening.
So yeah, big move in the industry. We put it on the list. It closed nicely that day on April 28th, and then the next day it's up 5% in the morning when the market is down. Right away, we took partial profits in that stock because we know we're fighting against the market trend. We want to capture this. Later in the day, it went up even more. The next day, it rallied again, and I think, what was it up? Almost 16% from where we put it on?
I think you're still thinking of FCX.
Oh, I love that.
Yeah, you are. We'll get to FCX. So we actually didn't take half profits on this one, but we did keep a tight leash on it. So we actually put this right in the trade that because it was a tougher market environment, we were keeping a tighter leash on this. And we also discovered that the company was having an annual meeting coming up.
Right, before earnings.
Yes, before earnings.
Into that because that's one of the things we do. We'll go and look at the website and confirm when the earnings date was. And it was an unusual case where you had a company meeting a couple days before earnings. We wanted to get out of that ahead of time.
The company meeting was May 4th, and the earnings were May 9th. So, yeah.
But now that you've clarified my thinking, let's just reiterate the fact that when a stock runs up 5% past its buy point, we typically move the stop loss up to positive 1% because we never want to round trip a good trade and have it turn negative. So in this case, we moved that stop up, and then it was triggered, 2 days later.
Exactly. And so here again, we were actually already looking at this to potentially come off. We took it off on May 3rd. Mm-hmm. We knew that annual meeting was happening May 4th, so it kind of just coincided that, it triggered that stop loss. We were going to take it off anyway, so we just got the 1% profit on it.
Right. And one last point. This morning, the stock was selling off, and it undercut that original 1508 stop loss. So if you hadn't have raised your stop to positive 1, you would have seen that stock rise as much as 6.7% and then come all the way back down to a 3.2% loss. We definitely don't want to do that. Again, a reason why we're moving these stops up and taking profits when they reverse.
Let's take a look at another past trade that we had, USCR. Now, here again, this was an industry move that was happening. We saw a lot of construction stocks making a move. Beacon Roofing was something we had on earlier. So we were watching a lot of these stocks, and this one was one we put on before the breakout. So we put it on April 13th in anticipation of the breakout, and we pointed out, okay, here's where the buy zone would start. We actually put in the original post, we're looking for about 400,000 average trading volume to occur, or if it's in the morning, that it would be on par to do that type of trading volume. And the next day, April 14th, it did break out of that quick little 10-day consolidation. This is another one that it was real nice at first. It just kind of kept on moving up and up. It had that one down day, and then we found ourselves with a 5% profit on it. We moved up our stop. So the original stop, we actually didn't have a number yet, because when we first put it on, We just said, you know what, we're going to start with 3%, but after the breakout, we put the low of the breakout. So we had to wait for that to happen in order to come up with that number. So we put on, the stop of 62.21. We raised it to 64.69, and as we got that 5% profit, we started seeing some bigger gains. And actually, we were thinking we were going to get 10% out of this. The 10% level we were looking for was 70.05. It got to 69.66. So almost there, not quite. But then what we ended up doing was we ended up taking half profits on this one. So we actually put that right there in the goal that profits were taken on a half position at 67.30 as the stock showed gains over 5% on April 26th. And then eventually what happened was it kind of reversed, closed below the 5-day. There was no reason for us to kind of, try and wait it out, especially with the market turning the way it was. So we took this off and we got a 4.37% gain on it.
All right. Here's finally, FTX, my favorite stock. Well, one reason why this is my favorite stock right now is we put this on Tuesday morning, the day we went live with Leaderboard. And the folks who saw, Leaderboard, with Swing Trader, when we, saw it in the navigation and, jumped into it, this is one of the first things that came on the list. And so, again, part of this whole miners move that we were seeing, there were earnings that day. We put it on. It ran up nicely the next day, up 5% in the morning. We took half profits at that point. I think at the end of the day, it was already up almost 10% or around 10%.
That's what I kept on hearing.
And then the following day, it went even higher, up about 16%, but it reversed. So we're in a weak market. We get a big reversal after two big gains, and at that point we cut we closed the trade and moved it off and ended up with an 8.3% gain.
And just so everyone understands, that 8.3% gain was taking into consideration our half profits that we first took at 12.05, and then we just basically
11 something.
Yeah. What's that? 12.05 was the price that we took half profit at, and then we took another gain, and that got us to 8.3% gain.
Okay.
Now, they aren't all winners. We have taken losses, so this is one of our larger, actually I think it's our second largest loss. This was Urban Outfitters. It had a breakaway gap. It was looking great on the breakout day, doing everything right, and then what we noticed was the next day it undercut the breakout low. So we had already set that level in the sand. It crossed it, so we took it out. Now, you'll notice that what happened was this is a stock that went down significantly more than 3%. It just kept on going down. It eventually got support at the 50-day, but we were out of this at this point. We were not going to sit through something like that. That can not only ruin our batting average, but it can ruin our average losses. We don't want to let any losses get away from us. So we had no problem just removing this. It broke a rule, and it's out.
And more importantly, it can hurt your confidence, and you don't want to be saddled with a big loss and start second-guessing yourself. So here's another good example like that. This is Cray. We put it on a reversal. It gapped up the next day. Everything was looking good, and then it came back that day. And so again, we had moved the stop loss up to 1%, and as soon as it hit that level, we took it out. And again, this swing trading is not for people who then say, well, a buy and hold investment, right, something like that. Because in this case, it pulled back. Yeah, maybe it doesn't look too bad. It's around the low of the reversal day. But earnings came out today, and what was it down? More than 20%?
Yeah, it gapped down. I think at the open like 22%. I think it closed right around 20% loss for the day.
So you need to be committed to following the rules, buying close to the buy point, taking profits when you have them, and don't make excuses of why you need to hold a stock that's now negative. Get out and, by all means, don't hold into earnings. You never know if that's going to be a gap up or a gap down. That's not the game we're playing here.
We talked a lot about these alerts earlier. Can you walk us through all the different scenarios when you would receive an alert as a subscriber?
So there's basically six types of alerts that we're going to send. So first of all, when a stock is first added onto the list, you're going to get an alert. So a new trade is created, whether it's on the long side or the short side, you'll get an alert on that. Now, if the stock is in the buy zone, you're going to get an alert on that. So sometimes we're putting them on earlier. They're not in the buy zone yet. Sometimes they might be in the buy zone currently, so you'll kind of get two alerts. It'll say, a new stock is added and it's in the buy zone. So that might happen sometimes kind of back to back. Now, there's also going to be alerts when we move something to a past trade, so when we take it off the list. So you could see that it's either hit its profit goal, so you'll get an alert for that. We've taken it off the list because it hit a profit goal, or that it hit a stop loss. We'll take it off and you'll get an alert for that. Finally, there's those situations that we talked about where it never entered the buy zone, and so we'll remove it because it's not acting right. It's done something kind of funny, and this is one that you should never have traded. It never entered the buy zone, so we're going to remove it, and it's basically going to say never triggered. Now, we also have custom notifications, and this is kind of our way to communicate different things to you. So
in real time.
In real time, absolutely. You basically, I think by my timing, about 1 second after I hit publish, I see the alert, pop up. It's very, very quick. So a few of the custom alerts that we've sent, just today, we sent a custom alert that the market changed. We went from sideways to downtrend. Earlier this week, we sent an alert that we were taking a half position. So this is not something that was moving to past trades. We were taking a half position sell, basically, so we would have sent an alert on that.
And we've done it when we've raised the stop loss.
Yes, when we get 5% profit. Okay, now we're raising the stop loss. Or in the case of U.S. Concrete, we didn't have a stop loss that was set off the breakout low because we didn't have the breakout yet. So once we got the breakout, okay, now we're setting the stop loss at this reasonable support level. So it's basically our way to communicate with you, and we expect that you're not necessarily going to be at your computer the whole day, so this is our way to communicate with you what's going on.
Now, there's a couple of questions coming in. Now, how are these alerts going to be received?
So email alerts is the way that most people are going to receive these. We also have push notifications that people will be able to get. So, for example, if you are on your computer, you will see that notification pop up, and that's something that's kind of nice. I've enjoyed that because no matter what program I'm in, I'll see a little alert come on the lower right-hand side of my screen.
So we talked about what stocks, where we come up with the stocks, but how do you decide what stocks get on the list?
Well, the first thing we do is we run up to 12 custom screens looking for these highly rated stocks that are in consolidations or making reversals or just showing overall strength. Plus, we also go and we look at the IBD 50, the Big Cap 20, all the stock lists that you see in IBD. We're trolling to find candidates. So after we get some, general names that look promising, then we dig down and we start analyzing the price action and looking, minutely at the consolidations and the reversals and make sure that they contain those key elements of past successful trades. And we look at volume and price spreads and other technical indicators to confirm what we're seeing in the chart. Now, we also do fundamental analysis. Part of that comes in the way that we screen because we're looking for high composite rating stocks, which has baked into it earnings, sales, ROE, margin. Again, the whole idea is we want to be trading the best of the best. And, we're not so interested in a stock that may be going up, 10 or 15% this year. We want the one that's going up 100% or 1,000% or something like that. That's where you get these big explosive moves over very short periods of time. Now, the fundamental analysis will also include industry trends, and we talked about how we've jumped on some gold stocks because of what we were seeing in their price action, what the news was, things like that. So, we really do, in a CAN-SLIM way, marry fundamental analysis with technical analysis. Now, on the short side, it's very similar. We've got about 8 screens that we look at, and of course, we go into MarketSmith and we look at stocks breaking down off the Growth 250, things like that. And again, we go through that same process. Once we find our candidates, now we start analyzing them, and if they happen to start moving, we're looking at the volume. Is the volume high enough? How does it relate to volume over the past few days? Is it above average? Things like that. And once we make that determination, now we add it to the list. And the thing to know is it's probably, once we make the decision, maybe a minute to load it into the computer and publish it, and instantaneously you get the alert. So this is really real time.
Quick turnaround. Mm-hmm.
So what makes SwingTrader different? There's a number of our competitors out there. What makes SwingTrader unique? Why should our subscribers take a chance on us? The first answer for me is its simplicity. We showed you a couple of charts from our competitors. There's just an overwhelming amount of data and complexity. With SwingTrader, it's very, very simple. What they've done is they set up one easy list. You can scan the list. You can sort by buy zone. Is it in buy zone? And take action in minutes. Very, very simple.
Now, of course, what a lot of people do in swing trading strategies is they only focus on the technical. And while, technical is absolutely a big focus, we do not ignore the fundamental side of things. We've married both the fundamental and technical. In fact, just the other day we were looking at a stock and there was something behind the move that we just didn't quite understand, so we had one of the reporters do a little bit of extra research, find out what's going on with the fundamental story on this, what's happening, and there were some currency headwinds that were going away because of the dollar, and we just delved a little bit deeper, rather than just put it on without having that knowledge. So plus just using the ratings, as you said, that's going to get us a higher quality stock in terms of the fundamentals as well. So you're starting out with a very high quality universe.
Also, it works in any market conditions. Chris spent a few minutes talking about uptrends, sideways market, downtrends. With SwingTrader, we're not only going to tell you the short-term trend, we're going to present opportunities that would work in that trend. And oftentimes, it'll change in the middle of the day. And if the market's up in the morning, we'll put on long opportunities. If it reverses, we're going to change with that and give you opportunities in any market conditions where you can make money.
One of the reasons why we can remain so flexible is because we have the IBD database backing us up. We have so many different criteria that we can screen off of, and this database is so robust. It's been built over decades, 50 years now.
Yeah, right.
So it's and we have access to this, and this is what creates the stock list. We've got a lot of experience doing this, and so the fact that we can use those different criteria to bend with the breeze of what's happening with the market really helps us out in coming up with the best names. So having the database is really the biggest success that we have.
And finally, probably my favorite is the CanSlim Advantage. You're leveraging the top-performing CanSlim strategy. This is AAII's top-performing growth strategy. And to ignore that would be folly. All of our products are based on this successful strategy, and obviously we have to modify it for a shorter-term solution, but the CanSlim app obviously still applies and has been a big factor in our success so far. So in a quick nutshell, the SwingTrader advantages are the database that Justin talked to. We can screen on hundreds of different criteria. We're going to leverage the proven power of CanSlim. You're going to get that fundamental and technical analysis that other firms don't offer. We're going to save you time. Probably my favorite aspect is it's so easy to use because we're going to do all that work for you. And finally, you're going to get opportunities in any market environment. But the question you should probably be asking is, but does it work? So Chris, talk to us about your performance in beta.
All right. Well, the market team, we've been running SwingTrader for about 2 months before we went live last week. And in fact, before that, we'd been doing research and test trades and analysis for over a year. But when we started about 2 months ago, the market was pretty solid. In March, we were running about 60% winners. However, at the beginning of April, market got a lot choppier. It was up big one day and then down big the very next day, a couple examples like that in a row. And then by later in April 22nd, I think, the NASDAQ had closed below its 10-day moving average, and now it started rolling over and was actually trending below it. So By the end of that 2-month period, we were at about a 50% batting average between winners or losers. Our average gain was running 4%, average loser 2%, and that gives you a net trade gain of 1%. Now, you might be looking at that and say, well, 1%, that's not so great. In fact, typically in stronger markets, we're going to be have a much larger net gain than that. Probably, we've seen periods in the last year where our average winner was 6% and average loser was still around 2%. So, but in this market, which has been up and down, and now it's definitely down, we're running around 1%. So let's think about how that might work out. In a $100,000 portfolio, especially in a market like this, you'd probably only want to risk about 0.5% of your assets on each trade. So that's $500. Now, remember, we've been talking about our 3% targeted stop loss. So if you take that $500, divide it by 3%, that gives you a position size of 16,700. Now, with an average 1% gain, that's $167. Again, doesn't seem so great, but we've been we're right now putting trades on at about a rate of 75 trades a quarter. If you go and annualize that, that gets you nearly $50,000 in profits or a 50% return. And remember, this is just kind of an okay market, and really right now it's not that great. But earlier in the period, it was trending above the 10-day. We weren't seeing a lot of huge gains, and we were seeing a lot of stocks, running up 5 or 10% and then quickly returning. So just think for a moment, if that average gain was 2%, and maybe you're putting a 1% risk on each trade, so you're risking $1,000, all of a sudden these numbers get really large really fast.
Yeah, and I mean, one of the things is about these calculations, this doesn't even take into consideration compounding. What's generally going to happen as you get into these strong markets, you're going to be making more money, and you're going to be able to have larger position sizes as a result. It doesn't even take any of that into consideration.
So if this sounds like something interesting you'd like to try, we have a risk-free, complimentary 2-week trial. Go to www.investors.com/swing5. There's no obligation. You can cancel any time and try the product out. Now, we have just a little bit of time left for some questions. I know we've got quite a few questions. Let's dive into them. The first one I'm seeing is, how is the gain loss calculated on the current trade table?
So basically what we do on the current trades, not the current trades, the past trades or the current trades?
Let's do both.
Okay. So for the current trades, again, I spoke earlier about that entry price. So this is, again, not the price that we hoped that we would have gotten in. This is the price when we actually put it on the list, when the alert went out. So that's what our entry price is. So the gain loss is based off of that. And as we said before, if a stock hasn't gone into the buy zone, you won't see a gain or loss percentage because it will say not triggered. Now, for the past trades, same thing. We're going to be using that entry price as our starting point, and the exit price, if it's a stock that, triggered its stop loss, then in most cases that exit price will be the stop loss. If it closed below the 5-day, it's going to be the price that it was at when we sent the alert at. We're not going to be putting on the exit price a stop loss that was impossible for us to get. It's got to be during normal market hours that we could have achieved that price.
And typically, when we're making a decision on a stock closing below its 5-day or 10-day moving average, we start looking at these pretty carefully around 12:30 our time in the Pacific zone. And by 12:45, 15 minutes before the market closes, we start sending out the alerts.
Yeah. You know what? I just got a question from customer service today. Someone was asking about ITW and said, well, you guys said that you took it off because of a close below the 5-day, and it hadn't closed below the 5-day yet. That alert went out at 12:45 or 12:46, and yeah, that's the way we're going to do it. We're going to try and get those alerts out so you can act on the information. So it was about like 0.3, 0.4% below it, but there was also the market.
Right.
That was a reason why we took that one off because it was looking like it was going to close below the 5-day. And if you looked at what it did today, it was down 1%. So
sure.
I think we're okay.
And
with
if you want to wait till 12:59 and 59
right.
seconds
to confirm,
or if you're on the East Coast, 3:59. Please do.
You know what? A question that I saw earlier came up on the Theo trade. It was basically, saying that someone had tried getting into the site and they couldn't do it. It turns out the Theo trade site did crash briefly when we first I started sending traffic over to them. They did get the problem resolved. They'll make sure that they extend those free trials for you guys.
Here's one. It says, do I need to research any further for stock buys or sell, or just go with the swing trader buy and sell points?
Well, we feel confident that those are solid buy and sell points. It never can hurt for you to take a look at the stock and become comfortable with it yourself. Now, in this market, we have been a little reluctant to put stocks on before they're breaking out. In a stronger market where we're seeing, good follow-on breakouts, you're going to see more stocks going on the list before they break out. You'll see a lot of not triggered yet, and that'll give you time to dig in and take a look and become more comfortable with the stock. Or maybe some of the reversals. Those are usually that day or the very next day, but occasionally when it reverses and it still closes lower, or maybe we'll put it on, earlier in the day, you'll have time to take some, to dig in and do your own due diligence.
And as people read through our trade setups and our goal and stop losses, we're going to give you some helpful hints there. This has got a larger risk percentage on the stop loss, so you might reduce your position size.
That's absolutely important. So when whatever amount that you decide to trade as a percentage of your portfolio, the size of your position, when you see a reversal or a breakout that has a much larger stop loss percentage than 3%, you definitely want to reduce your position size, because you never want to be risking more money on a trade than you would on your average trade.
Mm-hmm. And that's also sometimes we're also going to, as you said earlier, lower the risk amount that we're willing to risk based on market conditions, and you might even just do fewer trades.
Yes.
You're not going to hurt our feelings if you do that.
Well, and that comes into the position calculator. You might have seen that on the chart, and a couple of people have asked us about this. And in fact, Justin is writing a swing trader column that will be in the paper and on the website. It'll be on the website on Friday, in the paper Saturday morning when it gets delivered to you, or Monday when it arrives. So we'll have plenty more on this topic. But the quick answer to what is the position size calculator, how do I use it, what's the reason for it? And like I said before, we're trying to keep losses at 3% or less, but sometimes you get a breakout or a reversal that has a much longer tail. You've got a bigger potential loss on your hands. And again, the calculator just makes it easy for you to enter in those values and figure out what the proper size position is, so the amount of money you're risking on every trade is exactly the same, or fairly much the same. Because really, when it comes to swing trading, you're working the averages, and you don't want to get your portfolio out of whack by some outsized stop loss.
I just saw one that said, should we sell in May and go away? You know what? That's the quick answer to that is we always just look at what the market's doing. We never take some cliche and use that as our investing strategy. Stop losses in the system. Maybe you can speak a little bit to this. This is a question that we've gotten a lot. Do you put a stop loss in yourself for the trade, or should people wait until they get our alert?
Well, I've never been a big fan of stop losses that the market makers can see. Now, some platforms like TD Ameritrade and others have conditional trades. At TD Ameritrade, they call them trade triggers. And so these are orders that stand in the ready, but they're on your broker's site. The market makers don't see them. So I feel much more comfortable with those. The other thing is the alerts are coming quickly. You can, of course, on your own brokerage platform, you can set your own alerts as well. So it really comes down to how comfortable you feel using stop loss, stops on a brokerage platform, and can you get to your phone? I mean, it's a whole lot easier to trade now. Usually, a lot of my trades happen on my phone.
You know what? To that end, someone was asking if they do use stops, whether it should be limit orders or market orders. That's a question we get a lot. I generally use market orders myself, and again, this is in very rare situations where I'm putting a stop loss in. If I'm going to be on a plane or something like that during market hours, I personally use market orders.
Right, and we said we scrupulously avoid earnings dates, so we're very careful to check that, and we'll recheck it. And if someone thinks we got it wrong, please let us know. We don't want to we don't want to put anyone at risk that way. However, there's always the chance of an analyst downgrade or some other bit of news that could hit the stock. So that's one problem that you see with stop orders is maybe the stock opens for a second below the low and then is right back above it. We saw that last week with one of the stocks. It eventually triggered the stop, but the open didn't hold.
Oh, you're talking about Broadcom, right?
Right, AVGO.
Yeah. AVGO, yeah.
Wish they'd get their tickers.
Right. So, just to kind of give the details on that, it did trigger, but we were looking at it in the pre-market, and, it wasn't an earnings report on that. It was an earnings report on Apple that had kind of, brought it down. But then on the other hand, you had Cirrus Logic that was doing well. So it was showing a lot of strength going into the open. So we actually sent a custom notification out on that, okay, we're waiting a little bit on the stop loss in this case to see how it acts. It did go, it did recover nicely, but then during the day it reversed again. So we just cut it.
We are running out of time. The final question that's come up a lot is, how much does SwingTrader cost? Well, it's just like Leaderboard. It's $69 a month. If you want to take the annual, it's $6.99, which is like getting 2 months free. And for those people who are Leaderboard subscribers, if you take the annual, you get $100 off for being a premium subscriber. So once again, if you're a Leaderboard subscriber, you get $100 off the annual SwingTrader, and vice versa. You take an annual SwingTrader, you get $100 off the Leaderboard. But the standard offer is $69 a month or $6.99 for a year. So thank you for your time, everyone. Thank you for Chris and Justin for taking the time explaining this. I think it's a very, very exciting new product. There's going to be more details in the paper, like the position size calculator coming out on Friday. So stay tuned for more videos and information on SwingTrader.
And this video itself will be archived and available on our site. So if you missed the first part of it or need a refresher, just know you can go back and listen to it all again.
Thank you for your time, everyone.